Hi, welcome to the Market Alert for Wednesday, the 13th of January 2020. So yesterday's headline or the summary of the day's events was Tech Rex and Russell soars as dollar dead cat bounced eyes. I do like this graphic here, which I'm going to keep for future reference. The dollar has moved higher, but dead cat bounce and is now moving back to the south as well. As it says here, after an unexpected plunge in small business optimism, buyers of small cap stocks are in a world of their own today. So let's have a look at the market. Let's start off with the German DAX on the daily. The market is sideways, as I mentioned yesterday, and I'm not going to mention it numerous times today. The markets are sideways, and this is the German DAX. The other one was the Dow, which we'll come to in just a moment. So you can see we're stuck in this sideways range. Yesterday we've got an inside bar, which I mentioned yesterday that we could have, and it turned out to be the case. The market trading down to the 50% fib retracement there, and overnight sitting on the 38%, below the 5-bar moving average. So that's the sort of immediate observations that we've got there. There's no new fibs to draw in because of the inside bar for yesterday. So these upside targets remain there as fib resistance levels. Overnight, if we just drag the chart to the left, we can see that the market gapped lower, has traded lower, going through the 200 MA there, but finding some support. Also moving below the DP level there, the daily pivot. Prices below this are bearish, above are bullish, which is what we want to see as the Fed continues to print money and support the stock market. So any pullback is a buying opportunity, and we can see there that prices got through the 200 MA, and then it's become support. And also where you've got the black line here, which is the 38% retracement in the daily chart as well. So you're combining all of these three things, you can see the market moving off this. So let's just bring us up to speed, see where we are. The market saying, well, yeah, we want to be above the 200, the DP and this, but at the moment we're having a bit of a shakeout to see if anybody wants to sell before we can move the market back to the upside. So if we just compress the chart, we can see that down to the low, if prices move lower, are around 70 points, and oddly enough the same to the top as well, which it will be because of the DP level. So there at the moment you can get an idea of any trade on either side where it would be likely to trade to. Obviously the low, very important in supporting the market to bring it back and get it above the DP level, and the high of course will want to continue and move through up to these pivot points that you've got in the daily chart there. So that's more or less a roundup of the German DAX. And then in the Dow, I'm not going to labor too long on this one, but just to show you this waiting for Biden, what we've got here at the moment, the market's stuck in this sideways move. The only thing that I would say is that if the market can break to the upside here, you've got your all-time high now at 31,252. And as we say, if we get a break above this, then we'll continue higher, and it will drag the DAX to the upside as well through those pivot points that we've just drawn on the, not pivot points, sorry, fibs that we've just drawn on the chart. So again, this is having more of a pullback than the Dow at the moment. Let's have a look at the implied volatility. This down slightly yesterday as the market had some support. You can see there 17.89. I've actually deleted the wrong graphic. It was 18 something, wasn't it, yesterday? But it's down to 17.89, but still not breached the low of 17.12. And in the color-coded one, we're still green, below the 20-bar moving average. And again, as the market trades sideways, there's less risk of a sell-off. There's no news really. Even the impeachment of Trump, or the proposed impeachment, is not really having any effect. It should be. I mean, these markets shouldn't be where they are, but they are because of the manipulation and the Fed supporting the market. Now they're starting on the yields as well, as the 10-year yield is over 1%. the Fed will not want rates to move higher in these markets. So they're going to actually start probably buying the long term on the bonds where they've been buying the 3 months. So yeah, all interesting stuff. News today, whilst we're here, Tuesday. It's not Tuesday anymore, it is Wednesday. So a quick refresh there, and we can see that Lagarde is speaking. I don't know what happened to her on Monday, but she didn't turn up. So maybe she's got more to say today. 9 a.m. Lagarde will be speaking. CPI and core CPI as well. And also you will notice that those that are vigilant, it was brought to my attention yesterday. If I just click on low volume, low impact, I should say. Is it today or tomorrow? No, it's here. Crude inventories have now gone to low. They were high this time last year. They went to medium, and now they're down at low. So if you're interested in crude oil inventories, then you need to switch off or on rather the low impact filter there. I'm not a fan of having the low news items around, so that's now disappears. So just keep that in mind. Okay, let's have a look at part 2, where we'll see what happened during yesterday's session. So the market kicked off, and we can see that it was volatile at the start with a potential sell signal there, and then the market tried to move higher, and you can see that it was just sent straight back. Even though it was above the 200 MA, the market wasn't happy. There was a lot of people wanting to sell at the open, and unfortunately we had a potential buy signal, but with no follow through initially, as prices again, you can see the amount of selling that came in at this level, because we've got selling over here as well, and prices then moved to the downside sharply. There's your further selling there, and then shake out. Now what's interesting about this bar here, it's inside the range of the previous bar, and the volume was less, so the selling was starting to drop off, which is interesting. But the market maker said, no, we need to slam this down and find out if anybody really wants to sell. So they shot it down to 89% retracement from this low to this high, which you can see here, and also the 200 MA. And then prices found support. You can see the buying there. You can see prices closing here. So as we move forward, prices reverse and trade up again to 78%. Which you'll see there, then to 89, and then we get a potential buy signal. So when we had the original buy signal, the sort of battle between the bulls and bears wasn't over, and they had to shake out, which they did here, to get rid of the stops, take people out, reverse, and then move the market to the upside. So I'm going to fast forward now. We need to take that 89% out that we drew in from here to here, which is there. I'm going to take this out, and then of course, just to make it a bit more interesting, we've got to take out this high here and then get through the BRN as well. So prices trade sideways, and then you can see there they come back, the buy signal's cancelled, and now I've just put some fibs in on the downside to see where prices are likely to find support. We then get another potential sell signal, but prices are sitting at the 78 there, and you can see that the volume in this bar is more or less the same as the down bar there, and prices close back higher, so there's obviously some absorption of volume there, and it's also at a 78% retracement, where you'd expect some sort of support as well. So price is now trading sideways. However, they fail to close back above the 20 bar moving average, and also they find some resistance here. You see how sideways the markets are, but it's trading to a certain pattern, and there is some weakness still in the market here, because what you would expect is prices to start to move around and move to the upside, but they don't. Market comes down, hits the entry, and now we have a problem as well, because we're down at 89% of the move from here to here, measured back, which you can see here. So we've got to get through this area here to move lower. So I'm watching at this point the volume in the market. That's the most important thing. And then prices actually drive through, but not on a major volume that I would expect. I would have thought it would have been a far higher number of trades and a red bar there. So prices do continue lower, and then interestingly enough, watch the volume build here. Now we've got more volume than we had in this bar moving lower, and we're sitting at the close. We've got the DP. They like to bring the market back to test the DP, but and they won't do it always in one go either. What you'll do is you'll get some profit taking at the big round number there. You see the volume there, and you will have also noticed that I've already taken the profits on this trade to make up for the loss on the first trade. Prices then bounce, which you'll see here, trading back up to the 200 MA, which is an interesting level there. That becomes a resistance. And again, look at the volume in this bar now as it starts to turn around. This is a 200 MA resistance. The market's tried to trade above, failed, and then wants to have another look to the downside. So as prices close back below, you can see it comes back and has another look and then closes below the 5 bar moving average. You see prices trading down to that DP level, and you'll see then support coming into the market. And again, look at this, you've got selling here, and you can see the volume there stopping the market from moving lower. So I'm just going to fast forward. There's the test to see if there's anybody else wants to sell. The market trades sideways and then starts to make its way back. And I'm looking at the daily chart just to see where we are in the bigger picture. And now we've got the test. We've got the buying back here. We're now free to move the market back to the upside, which is precisely what they do. So let me just slow down a bit here. From this high to this low, I've drawn all of these fibs here just to see where there's some resistance. And the reason I'm doing that is because from this high to this low, the market's already going to be at around 89%. So the 50% ties in with the 200 MA. And what we're looking for is the market to drive through all of these fibs if it is going to move higher. We then get a potential buy signal. And I'm just going to fast forward through this. We get some potential weakness there straight off. And again, you can see that is selling pressure there. So I was looking to think, well, maybe we're going to get a bit of a run back to the downside as prices are traded up to the 62% in the high of this bar. Again, an area where you'd expect some sort of resistance. So prices did move lower, as you can see there. And then let me just forward through this. You'll see prices then reverse off a 38% retracement from this high to this low to this high, which is here. And again, this is very important because once the 5 bar is above the 20 bar moving average, this then becomes your measurement of momentum. So you'll see prices moving sideways to high. Let me just bring this other chart back on. I was going to not discuss it, but I will, because just in case somebody sends me an email and said, what was the flashing of the 1 minute chart? I like to have a look at a 1 minute chart. I don't trade off it. I like to see what's going on inside of the price action. This is something that I want to introduce as well, because when you can actually see inside of the other time frames, it allows you to maximize the profits that you take off the table. So I better just explain what's going on here with the colors of the bars. This is a 5 bar MDI, which you can change in the settings, and I use this to see what's happening internally inside of the 2 minute. And what I was looking at here was this bar here. If I can pick it up, it's that one there. Yeah, that's right. And you can see how narrow this bar is, how much greater the volume is than the previous bar here, and that's down in here. So as the market was coming back and testing the 5 bar moving average, I could see that they were buying back in the 1 bar, in the 1 minute time frame, and then you get that straight reversal. They buy off it immediately, but it's low volume in this bar, and then of course as they get back to this high here, inside of this high, you can see them taking a bit of profits as the volume increase there. So that's what I will do. I just find the whole thing fascinating. You can do this from a weekly chart all the way down to a 1 minute and see exactly what's going on inside of each time frame and bar. But if you're just trading the one time frame, you can see that we're sitting now on the 200 MA, and the 5 bar is now moving higher as well, and we're looking to see if the market will get to the 78% retracement that we drew in originally from here down to here, and it does. And once we get to 78, again, you'd expect some sort of volume. And again, I'm looking at the 1 minute there, and I can see that this has come off the high, huge volume there inside. So I know that there's a bit of weakness around at the moment, and again, you've got it in the 2 minute chart as well. And take the money, and the market then trades sideways, comes back 78% from this high to this low, 79, and we've got the 89% in originally as well. So the weakness was in the market's closing below the 5 bar moving average. We've got the 89 and 78 there, and then prices show a potential sell signal, and the market then goes down to the close, down to the BRN, and then guess what happens? They buy straight back in at this level, which we can see here. Now, I haven't got the fibs marked up on here, but you can see that that's around 50 to 62% retracement. And immediately this happens, especially when you get it so aggressive like this, is a major warning that prices are likely to not continue lower. And as soon as they, again, you can see here how the supporting price is trying to move, absorbing anything that's coming in, keeping it above the 200 MA, and then prices just move straight up, spike up, and stop the trade out, and then we can see prices coming back again, annoyingly, and then we get another potential sell signal that disappears, followed by the buy there, and then prices once again start to move to the upside through the 78, through the, whoops, I'll just bring this back a bit. And once we get to the previous high, which I've got marked up there, the BRN, we see the selling coming into the market here. We have one more attempt to try and move higher, stuck at the 996, and there's enough there to cover most of the losses off the short side there, and then prices start to come back. And I'm looking at the daily chart to see where prices are. They're stuck at 62% retracement. You can see it's 14,009 there. So we'll need to take that out if it was to move higher. But back in the 2 minute chart, you can see that that wasn't going to be the case. And there's your potential weakness there. And then prices trading sideways. Time to get out. And prices then pull back. So let's move on to the afternoon session, or just before we do that, I've got a bit more in here just to show you prices coming back, and they stop at 89%, 78% retracement from this low to this high, and at the DP level as well. So let's move over to the afternoon, and we start off again, and what I always do before I start, or if the market's just open, is have a look, see where we are, see where the numbers are, just in case the market moves to the downside. Remind myself, even though I've got them on the chart, just to play catch up, see what's going on. And here you can see that in the afternoon, we've got the market moving higher, but then it's hammered with selling. You can see that, and then they bring the market back down to the 62% retracement there, and 78 they buy back in, and then there's a lot more volume in this bar than the previous bar, and it is narrow in range, but only slightly. And then prices start to trade sideways. They bring the market back again. I'm having a look to see where we are. They then again, you can see the increase in volume, and then prices test, not happy, we need to shake out, and straight down we go. And then watch the volume in this bar. You can see them bringing it back at this point. I'm just going to fast forward, and once they get back to the BRN, you can see that they managed to drive through, and then we get a potential buy signal there. So again, like in the morning session, you've got to shake out, you test, see if anybody else wants to sell, buy back, and then start to bring the market back. To get through the resistance, you want to drive through, even though we managed just to jump over the wall. and then to get through the 38% retracement, which is this black line, we need to drive higher. Prices at the moment are struggling. Again, you can see they're struggling because you've got this bar here with a lot more volume than the previous bar and less in range, so there's another battle going on. We need to drive through any sort of resistance in order to move higher, and there we start to see prices moving higher. And once you're through, then it's going to be a bit tough to begin with, because there'll be people who want to sell into that resistance area. There'll be orders, limit orders waiting. And then again, we get to the 200 MA. We've got an increase in volume here, but in order to move higher, we still need to drive through these resistance areas. And you'll see as we get to the DP there and the close, we continue to move to the upside there. And again, you can see now how we've come off that 38% and attempting to move back to the day's high, but prices struggled at this area. And again, you can see, you've got 70-80% of the volume in that previous bar, and these areas, when you're sitting on 28 points in a short move like this, is worth taking, especially with all of this resistance. It doesn't matter if it goes higher. It's a case of actually making sure that you are locking in those profits as and when you can. And here you can see the market coming back to that DP level, as there is a lack of interest in moving the market to the upside. Interesting bar there, where price is again very high volume. You get a couple of red bars, and then prices trade sideways to higher and start to move back, and then just traded sideways for the remainder of the session. But the main key here is to get the market back above the DP, which they do for a while, but then they're stuck at the close and the BRN, and you've got this small cluster here that you can see of potential weakness in the market there as well. Then they buy it back, and then the market just trades sideways there. Okay, that's it for this one. A lot of stuff to get through, I know, but a lot of details in there, and the more that you see this, the more you'll be able to read what happens on a bar by bar basis as the market unfolds in real time, and what to look out for as well with regards to fibs, pivots, etc. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.